The XRP market may be facing one of the most critical turning points in years. Coinbase XRP reserves have collapsed by 90% in just 3 months. What does this mean? It means that XRP available for purchase on Coinbase has dropped from 970 million tokens to only 99 million. This is not a normal fluctuation. It is a massive outflow of supply that could mark the beginning of a supply shock event. To put it in perspective, exchange reserves represent the pool of tokens that the exchange itself can offer to buyers. When those reserves shrink, it means investors are withdrawing XRP and taking it into self-custody. In most cases, this is a bullish signal. It suggests that buyers are not looking to trade quickly, but to hold long-term. In this case, the speed and scale of the decline raise even bigger questions. Could institutions already be accumulating XRP ahead of the ETF wave? The timing of this collapse in supply is remarkable. Tomorrow, the Federal Reserve is expected to announce a long-awaited rate cut. Analysts place the probability of a 25 basis point cut at nearly 100%. This will inject liquidity into risk markets, and cryptocurrencies stand to benefit directly. Then, just one day later, on Thursday, the first US XRP Spot ETF will officially launch. These two events combined, monetary easing and ETF exposure, create a perfect storm for capital inflows. And with less XRP available on Coinbase, the supply shock could amplify the effect. At the same time, the crypto market overall is showing mixed signals. XRP is holding around $3.03, Bitcoin near $116,000, Ethereum around $4,475, Stellar at 38 cents, and Hedera at 23 cents. While the broader market shows mild corrections, altcoins like ADA are recovering sharply, up more than 6% on the day. This volatility is normal ahead of major macroeconomic decisions. But what makes XRP different is the collapse of its available supply on one of the largest exchanges in the United States. Let's look at the numbers more closely. In 90 days, Coinbase XRP reserves dropped from 970 million to 99 million tokens. That is not a random coincidence. Whales, large holders, are pulling XRP off the exchange. Why? The most logical explanation is accumulation ahead of institutional adoption. If ETFs are about to bring in massive demand, it makes sense for large players to secure supply now, before the rush begins. By removing XRP from exchanges, they're also limiting liquidity, which sets the stage for a supply-driven price increase. This is how a supply shock works. When there is less available XRP on exchanges, but demand rises, prices move up because buyers compete for a shrinking pool of tokens. Even if XRP is still available, investors may only be able to purchase fractions. We're called drops of XRP. Just like with Bitcoin, where most people buy small amounts rather than full coins, XRP could reach a point where owning a single full token becomes a premium. Adding fuel to the fire, mainstream voices like Jim Cramer have dismissed the idea of an altcoin season, claiming it will never happen. But as history has shown, when Cramer says something, often the opposite proves true. Data from Polymarket shows a 95% probability of a Fed rate cut tomorrow. Combine that with collapsing supply and an ETF launch, and the conditions for an altcoin season, or what many call alt season, are aligning. The collapse in Coinbase supply is not just a number, it is a signal. It indicates that whales and possibly institutions are preparing for what comes next. Some speculate that major asset managers like ARK Invest, Bitwise, or Grayscale could already be accumulating XRP in preparation for their ETF products. If that's true, then the current supply shock is only the beginning. Once ETFs are live, demand will spike, and supply will be even more constrained. Right now, only 99 million XRP remain available on Coinbase. That may sound like a lot, but compared to the billions of tokens in circulation and the scale of institutional demand ETFs could unlock, it is a dangerously thin cushion. The implications are clear. When demand collides with shrinking supply, prices move higher, sometimes violently. For retail investors, this is a reminder of why holding XRP is not just about price speculation. but about understanding structural shifts in supply and demand. A 90% drop in reserves in just 90 days is not noise. It is a fundamental signal of accumulation, scarcity, and potential upward price pressure. So here we are, a Federal Reserve rate cut expected tomorrow, the first XRP Spot ETF launching this Thursday, and Coinbase reserves collapsing. This combination is unprecedented for XRP. It is not just another headline. It is a convergence of events that could redefine the market. If history teaches us anything, it's that supply shocks rarely go unnoticed. They fuel narratives, attract attention, and ultimately drive price discovery. With XRP, the stage is set. Less supply, more demand, and institutional legitimacy through ETFs. This is the formula for the next big move. The question now is not whether XRP will move, but how fast and how high.